Hello and welcome to the Farming Week, the podcast brought to you by Agriland, keeping you up to date with all the latest in Irish agriculture. I'm Charles O'Donnell and I'm joined by Aisling O'Brien and Agriland beef specialist Breifne O'Brien. Well, it's been a week of ups and downs in many ways. Just this afternoon, Minister for Agriculture Martin Hayden announced the start of payments totalling €1.9 million under the once-off baling assistance payment, which was put in place for farmers who withdrew or partially withdrew from the straw incorporation measure. On Monday, a housing order came into effect for all poultry flocks and captive birds all over the island of Ireland. This means that all such birds must be permanently housed until the respective departments of agriculture in the Republic of Ireland and Northern Ireland lift the order. The measure is to mitigate against the spread of avian influenza, or bird flu. On Sunday, the Department of Agriculture, Environment and Rural Affairs in Northern Ireland confirmed that 64,000 birds at a commercial poultry premises in Northern Ireland would be culled due to a suspected case of the disease. While the concern over bird flu is an ongoing issue, we also saw a new development from Europe this week, which was the publication of the EU's new Vision for Agriculture and Food. Aisling, this document has been a while coming, so can you give us a bit of a background on it and what the details are?
Yeah, I suppose this document has come about because it is part of the European Commission's response to the widespread farmer protests that we saw across Europe on a range of issues, I suppose most namely the prices that farmers get, but also the red tape and the bureaucracy that they face every day when they're working on their farms. And it also follows the final report of the Strategic Dialogue on the Future of EU Agriculture, which was published last September. And that document assessed the challenges and the opportunities in the sector, and it also presented a set of recommendations. So, Charles, fast forward to this week, and what we're being told is this Vision for Agriculture and Food is a roadmap for the future of farming and food across the European Union out to 2040 and beyond. So it aims to increase the attractiveness, the competitiveness and the resilience of the agri-sector in Europe, as well as to future-proof it for future generations as well. Now, there are around 30 million people currently employed in the entire EU agri-food sector, but just around 12% of farmers on the ground are under the age of 40. And in response to that, the Commission is to lead a generational renewal strategy to be delivered this year in cooperation with member states and the EU Parliament. So this vision, it's across some 28 pages, and along with that strategy for generational renewal, it also tells us that farming and food are core to the European way of life, and the Commission is committing to a new way of working on food and agriculture, which is focused on building trust and dialogue across the entire value chain. Now, the Commission said that farmers must get a better revenue from the market, and that practices where farmers are systematically forced to sell below cost will not be tolerated. And among the initiatives to be proposed by the Commission will be a revision of the Unfair Trading Practices Directive. Now, when it comes to competitiveness and resilience, this document aims to continue to prioritise food security and sovereignty in a couple of different ways. And it notes that trade negotiations and agreements will be used to their full extent while protecting the interests of European farmers, which of course will raise some eyebrows when it comes to the very controversial Mercosur trade agreement. We'll come back to that in just a little while. But the vision also promotes, Charles, a stronger alignment of production standards for imported products, which is obviously a big bugbear of European farmers, that the same is not applied to imported products. And for that reason, the Commission is going to start taking steps this year to ensure greater coherences in the standards when it comes to hazardous pesticides banned in the EU and on animal welfare as well. That's where this is starting. A commitment has also been given to strengthen the competitiveness and resilience of sensitive sectors, as they're called, such as livestock. And it notes that a long-term vision is needed for the EU livestock sector and that a one-size-fits-all approach will not work when it comes to that. And the next CAP, we're being told, will provide more targeted measures and investments to make agriculture more resilient to climate change. This document says that technological advances in feeding strategies are going to be crucial to reducing emissions, and that special attention needs to be paid to improving the management of nutrients at farm level, and that priority should be given to address so-called nutrient pollution hotspots. We're also being told that the Commission is going to roll out a water resilience strategy, and that will all cover the need for more efficient water use on the ground. And I suppose when it comes to CAP and a lot of farmers wondering what it's going to look like beyond 2027, this vision document says that the future CAP will be simpler, it'll be more targeted, and it will define a clearer balance between regulatory and incentives-based policies affecting farmers. So as a general principle, Charles, they're saying that the future CAP support will be more directed towards farmers that actively engage in food production, towards the economic vitality of farms, and to the preservation of the environment. And the Commission is due to commit to moving the next CAP away from conditions to incentives as well. So what we're, I suppose, used to the current system of conditionality, it's expected to be simplified, and a lot of farmers will be very grateful to hear that. And farmers will be given further agency in designing farming practices that are more tailored to their farms as well. Now, the European Commissioner for Agriculture and Food, Christoph Hansen, told a press conference in Brussels this week that the future funding under CAP should be further directed towards those farmers who need it most. And he noted that the pot of funding for CAP is already confined to what's going to be available under the EU's long-term budget, which is often referred to as the Multi-Annual Financial Framework, the MFF, which is actually currently being debated and revised as well. And it'll go in tandem with the CAP as well beyond 2027. So here's some of what Commissioner Hansen had to say about that funding for the next CAP.
We need to focus the restricted amount of money that we have at our disposal. We don't even know what we will have exactly at in the frame of the next MFF. So it needs really to get there where it is most needed. For me, where it is most needed is definitely the young farmers. Smaller and family-sized farms will be very crucial as well. And therefore, of course, we need to discuss again, we did this already during the last reform, about degressivity, because when you have a farm of 5 hectares, you don't have the same needs than a farm of 5,000 hectares, for example.
Now, Charles, Commissioner Hansen also noted that there is a negative public perception about how CAP funds are distributed. And that, I suppose, refers to the fact that 80% of the CAP direct payments go to around 20% of recipients, which is seen as being very unfair. And he said that we have to work towards a more farm-based support and move away from the simple hectare payments. And this may involve the Commission considering the enhanced use of the capping of payments, conversion, all of these different tools that they have available to them. And on CAP payments for young farmers, the Commissioner said that young farmers have to be better supported, and they also have to consider as well, the Commission, looking at banks and finance as well, and making sure that young farmers can see farming as an attractive career and one that they want to get involved in as well, which of course points back to the fact that just 12% of EU farmers are under the age of 40, which is a big problem going forward that the EU Commission needs to sort out.
Yeah, absolutely, Aisling. And I suppose in terms of the reaction from farm organisations, I suppose cautious welcome might sum up their views, would it?
Yeah, nail on the head, Charles. Definitely a lot of reaction from farm organisations here at home and right across Europe to this document. The IFA Deputy President Alice Doyle said that farmers can't afford to wait until 2040 to implement many of these ambitions in this document. And she said that her initial reaction to it was broadly positive, but it's going to be judged on how many of these objectives are achieved in the term of this current Commission. And she said that the vision had little detail on the future of the CAP funding, and I suppose also the need, of course, for a separate fund for environmental measures. And she also said that the document highlights the importance of a stronger alignment of production standards to imported products into the EU, but she questioned how the Commission can then proceed with the Mercosur trade agreement, given what she said is the clear divergence there in production standards between the EU and the South American countries of the Mercosur bloc. Switching to the Irish Creamery Milk Suppliers Association, they said the strategy appeared to be a signal of a step change when it comes to EU farm policy and maybe how the Commission interacts with farmers as well. But the ICMSA President Dennis Drennan said that the success or otherwise of this vision will depend on the policy actions that follow. And he said one of the main intentions of this new document, according to the Commission, is to simplify regulations. But he said that so far this year, actually, regulations have only become more complex. And he pointed to the fact that we've new regulations in terms of veterinary medicines, new rules on nitrates, and new rules on peatlands, the GAIAC 2 regulations regulations that we spoke about last week. And he also called as well for a significantly expanded CAP budget in his reaction to this vision document. The Irish Cattle and Sheep Farmers Association President Sean McNamara said that it was an important step, this document, in shaping the future of farming in the EU. But all of these ambitions, again, similar to the other farm organisations, they're going to require substantial investment, McNamara said. And he said it was welcome that the Commission intends taking concrete action to ensure that farmers aren't forced to sell at below the cost of production. And the review as well of the Unfair Trading Practices Directive was welcomed as well. But he said that review has to lead to real enforceable protections for primary producers, and that we need to see meaningful penalties for large retailers and processors that engage in exploitative practices. So a lot of reaction, Charles, as I said, home and abroad, and you can read those in full on our website and app.
Well, we're going to move on now. And Breifne, you had some interesting figures today on fertiliser prices. And obviously that's very timely at the moment as the period for spreading fertiliser is opening up. So what figures do you have there?
That's right, Charles. So I suppose it's that time of the year again on many farms, and it's, I suppose, approaching on other farms. And while some farmers may have already purchased their chemical fertiliser, other farmers will be purchasing it in the coming weeks. And I suppose the question on everybody's minds now at the moment is, what prices are fertiliser currently at, or what prices is fertiliser currently making per tonne? The IFA actually sent around, they requested prices for our different merchants, and they took an average price per tonne on what was reported back to the organisation from different merchants around the country. So urea 46% was coming in at $4.90 a tonne, protected urea at $5.30 a tonne, CAN at $3.75 a tonne, CAN plus sulphur $3.85 a tonne. You had 18-6-12 there at $500 a tonne, and the likes of your 10-10-20 at $5.80 per tonne there. So just to clarify again there, that the prices reported there are averages reported by fertiliser merchants around the country to the IFA, and are for full loads of half-tonne bags delivered with 30 days credit.
And that's on input prices, Breifne. But just while we're on prices, but switching over to output prices, and you are the beef specialist here at Agriland, of course. So factory quotes still holding strong at the moment, is that right?
That's right, Charles. So anybody, I suppose, in agri circles will know that the rise in beef prices is a big talking point at the moment, and these increasing beef prices are filtering down into cattle prices being paid at marts countrywide as well. Looking at the top end of the trade there in marts around the country over the past week, bullock prices over 500 kilos have crossed the €5 per kilo price mark. Weaning heifers have reached as high as $8.29 per kilo and more in cases, and cull cows have cleared 3,500 at mart sales around the country. Now, I suppose it's important to point out that these are prices at the top end of the trade, but average prices in each weight category have also increased. I suppose we're coming into a time of the year now where the demand for store cattle is expected to increase in the coming weeks. Of course, the grazing season will be approaching, and more farmers will be buying cattle for grass. They're looking at, I suppose, the beef trade. There's no major upsets forecast in the factory beef trade, so all indications would point to a continued strengthening of cattle prices for the short term at least. I suppose then, while we mentioned some of the prices seen at Mart, some of the top prices, looking at this week's factory quotes for beef cattle, this week seen yet another price increase across the board, with price quotes now running €2 per kilo or €800 on a 400 kilo carcass, above this time 3 years ago. And it's about €1. It's up about €1 in the past 3 months. So this week, heifers have been quoted at $6.40 per kilo on the grid, with steers being quoted at $6.35 per kilo on the grid. Now, at the higher end of the price scale, $6.50 per kilo on the grid has been tabled in some cases, and flat price deals of €6.80 to €7 per kilo have been reported at some sites across the country for good batches of continental heifers. That would be, I suppose, just a guide then on cow prices and bulls at the moment. Or-grade cows have been quoted at €6 to €6.10 per kilo. Under 24-month bulls have been quoted at $6.70 to $6.80 for U-grades, with $6.60 to $6.70 being quoted for or-grade bulls. And we have under 16-month bulls have been quoted at approximately $6.30 per kilo on the grid in general this week. Again, Charles, it's important to highlight that there is a big variation in beef prices across the country. Some farmers are managing to secure slightly more from the market, while other farmers would be being quoted maybe slightly below these levels.
And just before we let you go, Breifne, regular listeners of the Farming Week and readers of Agriland will know of the ongoing issue between ICBF and various breed societies on the revisions to the Eurostar evaluations. So what's been the latest updates on that this week?
So I suppose the latest update, Charles, has been from the Pedigree Breeders' Council of Ireland, which is made up of, I suppose, several of the key beef breed societies. And so this grouping has decided to vote no confidence in the board of the ICBF. So this vote came from, I suppose it came from the fallout or following a meeting of the members of the ICBF Stakeholder Forum, which was held on Friday, February 14th, and the meeting was focused on the Eurostar indices. So this forum was formed following the November 2023 evaluations in a bid to address concerns of suckler farmers and pedigree breeders following the changes to these evaluations. Now, Sean Coughlin, the chief executive of the ICBF, has confirmed to Agriland that the economic valuations for the Eurostar indices will be updated this summer. And he also confirmed that work has already gotten underway on updating the economic values, and this has been led by Teagasc Beef Enterprise leader Dr. Paul Crossan. So the ICBF CEO also confirmed that farmer recorded data will be used as part of the evaluations from this summer onwards. But despite these developments, and the announcements seem to have not satisfied the concerns of the Pedigree Breeders' Council of Ireland. So I suppose the disagreements between the pedigree breed societies and the ICBF is still ongoing, and it's still an ongoing issue, Charles.
But switching over now to the dairy sector, and Aisling, we've seen major processors in the last 7 days or so finalise their milk prices for the month of January, and we've also had a global dairy trade auction as well. So what are the main updates for dairy farmers to know?
So let's go global first, Charles, and then we'll come back home. So the average global dairy trade price index fell this week by 0.6% after the latest auction, which was held on Tuesday. Majority of prices fell back in that auction, with the exception of butter, which recorded the strongest performance. Disappointing results in particular in the auction for cheddar, lactose and skim milk powder. Now back to those all-important milk prices. Lakeland kicking off as usual in the month, and they said that they will pay a base price of 49.75 cent a litre inclusive of VAT, a constituents of 3.6% VAT and 3.3% protein for January milk in the Republic of Ireland. That is inclusive of a 0.5 cent a litre sustainability incentive payment. Qualifying farmers will also receive a 5 cent a litre out of season payment. In the north, Lakeland will pay a base price of 40.8 pence per litre for January supplies, which is inclusive of a 0.5 pence per litre sustainability incentive payment. And the base price is also held from last month, and the 3 pence per litre out of season payment will be made on top of the base price in the north. Kerry Dairy Ireland confirmed the milk price for January supplies for their suppliers is 53.5 cent a litre including VAT, which is up from 50 cent a litre in December. The processor stated that this is inclusive of a base price top up of 3 cent a litre including VAT and quality bonuses. Carberry announced its milk price for suppliers in January, confirming that it was holding its price. Carberry said that if that decision is replicated across the 4 West Cork co-ops, it will result in an average milk price of 53.57 cent a litre, including VAT, the somatic cell count bonus and the future-proof sustainability bonus. And on that future-proof sustainability bonus, which is available for this year, it is increased by 0.25 cent a litre to a total of 1.25 cent a litre. Dairygold also announced that its quoted milk price for January has remained at 50 cent a litre. Additionally, the processor's early calving bonus for January is 3.36 cent a litre, including VAT, and that will be paid on milk supplied in January in accordance with the milk quality criteria. This will increase the attainable Dairygold milk price, we're told, to 57.36 cent a litre. Now, Tier announced that it will pay suppliers a total of 58.08 cent a litre, including VAT, for January milk supplies at 3.6% VAT and 3.3% protein. That's an increase of 2 cent a litre on the price from December. However, this is due to an increase in the seasonality payment. That seasonality payment of 7 cent a litre, including VAT, will be paid on all milk volumes supplied in January that meet quality criteria as well. And just, I suppose, staying with Tier Lawn for the moment, Charles, the processor has launched a new milk solids growth programme, which they say aims to help farmers increase milk solids production in a sustainable manner using a farm-specific data-driven approach. We're being told that each milk supplier in Tier Lawn will receive tailored advice that is relevant to their specific herd. And the Chief Agribusiness Officer with Tier Lawn, Ailish Byrne, said that the initiative would help farmers to get more from every litre of milk in a sustainable manner. If you want to learn more about that programme, you can log on to Agriland. And just before we leave, some dairy news for this week. Kerry Dairy Ireland has confirmed that payments are currently being made to milk suppliers under the Milk Supply Agreement Fund. Now, that €50 million fund was offered by Kerry Group to resolve the outstanding leading milk price dispute, which of course has been the subject of long-running arbitration. And the fund was subject to the acceptance of a deal which involved Kerry Co-op buying Kerry Group's dairy business, Kerry Dairy Ireland, for €500 million. Of course, that got the go-ahead from shareholders in December. However, a group of Kerry milk suppliers have raised concerns this week about the payments which are being issued to farmers now. The Munster Dairy Producer Organisation claimed that when shareholders voted on the joint venture agreement, they clearly understood that the €50 million fund was exclusive of VAT. And James Doyle, the chair of the MDPO, said if the fund includes VAT, it means that the payment made by Kerry PLC for the leading milk price compromise is just €47.57 million. And he said that would be totally unacceptable to dairy farmers. And a spokesperson for Kerry Dairy Ireland confirmed to Agriland that the total value of the Milk Supply Agreement Fund currently being distributed to milk suppliers is €50 million, VAT inclusive. And they said that the fund is allocated in full and in accordance with the milk supply contract.
Well, for many out there, the memory of Stormy Owen is fading. But for many others, especially those in the forestry sector, they will continue to feel the effects for some time to come due to downed trees. There have been several meetings around the country for forestry owners to get together and discuss this issue. One such meeting took place in Leitrim this week. What came up at that meeting, Aisling?
Yes, Charles. So this meeting was organised by Irish forest owners to discuss the options and what may be the next steps needed for forest owners following the devastating impact of both Storm Éowyn and Storm Dara. Now, the meeting was addressed by Enda Keane and Gareth Malooly from the Cork company Tree Metrics. Now, they showed those present at the meeting the technology available to them, which they have used to determine that about 11,750 hectares of forestry has been blown over. And to their knowledge, they said there are about 4.1 million cubic metres down across Galway, Roscommon, Longford, Sligo, Leitrim and Cavan. And to put that into perspective, Charles, the meeting heard that Ireland normally harvests about 4 million cubic metres per year on a normal basis. So it just shows the extent of the damage on the estimates from Tree Metrics. Now, Enda Keane gave a stark statistic to the audience, and he said that typically after storms, the value of forestry can drop by between 40 and 60%. But he said that that's not necessarily what's going to happen in this instance, but he did warn forestry owners to mobilise and to take action. And a technical expert with the Irish Bioenergy Association, IRBIA, Noel Gavigan, gave a presentation as well to the meeting. And he said that bioenergy makes up 2/3 of all renewable energy in Ireland, and he told forestry owners that stacking of timber is very important to address urgently, as fallen forestry can start rotting very, very quickly. Now, neither the Minister for Agriculture, Martin Hayden, nor Minister of State at the Department of Agriculture with responsibility for forestry, Michael Healy-Rae, were present at the meeting, nor were there any representatives from the Department of Agriculture, which I suppose was very disappointing to those who organised the meeting, but also to those who were present. And it was something that the chair of Irish Forest Owners, Derek McCabe, was very disappointed by.
But our goal from this day forward is to salvage our timber in the safest possible manner, to maximise our returns and to replant our land. And we can't do this alone without the support and assistance from every actor in the forestry supply chain, from government right through to the processor. I would be disappointed following an invitation to both Minister Healy-Rae and Minister Hayden that neither of them turned up this evening. And I think by the attendance that's here this evening, I think they'll regret that decision.
Now, Independent Ireland TD Michael Fitzmaurice also addressed the meeting, and he said that the information he's received is that about half of forest owners have felling licences, and he said he didn't have much faith in the current licensing system and said that in his opinion a scheme should be put in place for those impacted. Of course, many of the people in the room may have been looking at that forestry plantation as a pension fund, Charles, so it's very, very upsetting and devastating for them when they see the damage that has been caused. And I suppose forestry owners who have suffered losses of trees as a result of the storm, they still do require felling licenses to remove the timber, and that has caused frustration and anger among forestry owners and stakeholders. And the Irish forest owners have called as well for a plan to ensure that sawmills are working at full capacity. And the main advice from the meeting, as I said earlier, to forest owners was to link up, to mobilise and to get in touch with neighbouring forestry owners and to act quickly to organise the harvesting of timber and ensure the best negotiating position on price as well. And of course, safety has to be paramount as well, Charles, because these plantations can pose a huge danger because of the way these trees have been left after the storm. And just separately to note, the Department of Agriculture did issue a new circular on Wednesday which confirmed that existing felling licences may be used to clear and remove trees damaged by storms Dara and Éowyn. So more to come, no doubt, in the coming weeks on the devastation caused by the storms to forestry plantations across the country.
Thanks for that, Aisling. And of course, anyone listening can stay tuned to Agriland.ie and the Agriland app for updates on this ongoing issue. Well, that brings us to the end of today's show. Please don't forget to rate, review and follow The Farming Week on Spotify, Apple Podcasts or wherever you get your podcasts. We'd love if you could spare some time to give us 5 stars and share The Farming Week with anyone you think might be interested. From Aisling, Breifne and myself, thanks for listening.